Hello students, today we'll solve the 12th problem in our NPO chapter. Now here the receipt and payment account and adjustments are given. So let's start first with marking the adjustments. In your first adjustment, the opening balances of assets are given. The second adjustment is subscription received in advance. So put a tick on subscription. We have to leave one line below subscription. The next adjustment, outstanding salaries and outstanding rent. Then admission fees to be capitalized, so put a tick on admission fees. Furniture and books to be depreciated. So when we write the opening balances of furniture and books, we need to leave a line below that. Interest on investment. So put a tick on interest on investment. Now let's see the postings. The opening balance, we need not record. Admission fees, subscription to be recorded on the credit side of income and expenditure account. Now there's a lecture hall which is given on hire. So the charges received is the income. So we write on the credit side of income and expenditure account. Miscellaneous income, interest on investment again is the income. Then we move on to the payment side. Salaries, rent to be shown on the debit side of income and expenditure account. Investment, asset side of balance sheet. Stationery, electricity charges, again expenditure side of income and expenditure account. Books, asset side of balance sheet. Now this outstanding expenses for 2018-19 means these are last year expenses. It reflects in receipt and payment account as we have made this payment for these expenses in current year. But this will not be shown in our income and expenditure account as it is not a current year expense. Then the closing balance of cash will be shown on the asset side of balance sheet. Students, did you notice that in this problem, the opening capital fund is not given? So here we have to calculate and find out the opening balance of capital fund by preparing the opening balance sheet. So let's prepare the opening balance sheet. According to the first adjustment, the opening balance of book is 50,000, furniture 6,500, machinery 30,000. Then we have the opening cash balance 5,000. Then in your receipt and payment account, we have the outstanding expenses 500. These were the expenses which were outstanding in the previous year. So it will be shown on the liability side as outstanding expenses. And now when we take the total, you will get the balancing figure 91,000 as your capital fund. Now these are the postings from your receipt and payment account and the balances of assets. We'll start with recording the opening capital fund balance, that is 91,000, which we calculated by preparing the opening balance sheet. Now we move on to the adjustments. The second adjustment, subscription received in advance, rupees 500. This is our next year's subscription which is received in advance. So we deduct from subscription on the income side and the second effect on the liability side of balance sheet. Then outstanding salaries, rupees 1,300, add in salaries. Outstanding rent, rupees 950, add in rent. And the second effect, liability side of balance sheet, outstanding salaries and rent. 50% of admission fees should be capitalized. So we deduct 50% of the admission fees on the income side of income and expenditure account and add it in the capital fund as admission fees capitalized. Then depreciation on furniture at the rate of 10% less depreciation 10%, that comes to 650 rupees. So outer column 5,850. And the second effect, income and expenditure account, debit side to depreciation on furniture. The next, depreciation on books. Now here the opening balance of books 50,000 was given in the first adjustment. And we also had books purchased which was shown on the payment side of receipt and payment account. So we add 5,000 books purchased during the year. Now since these books are purchased on 1st April, we calculate depreciation on 55,000. So 10% depreciation on 55,000 comes to 5,500. And the second effect, expenditure side of income and expenditure account. The next adjustment, investments were purchased on 1st of April and they carry interest at the rate of 20%. Now, if we calculate 20% interest on investment, it comes to 1,200. And you see, we have already received an interest of 900. That means rupees 300 interest on investment is not yet received. So we add that 300 and then in the outer column we have 1,200 which shows the actual income on investment. The second effect, on the asset side, interest due on investment 300. Now here we have done with all the adjustment effects. Let's close the income and expenditure account. After closing, we get a surplus of rupees 300. Now students, here you have to write to excess of income over expenditure and in the bracket surplus. We add this in the capital fund and now we take the total of your liability and asset side. Your balance sheet stands tallied. I'm sure you have understood this. Thank you.